Good morning. It is Stock Karen back with you, and I need to speak with your manager. I have a complaint. My shares of SoFi are in the toilet, and I am getting my ETH handed to me by the short sellers and market makers who are destroying the stock. Wait, folks, it's not Stock Karen. I kid. I'm just trying to tickle your funny bone. It's me, Danny Deals, your buddy. It's hard to smile and be jovial when your portfolio is getting lit on fire and thrown in a garbage dumpster. But anyway, it's a hot mess. What are you going to do? It is May 4th, 2023. It's 8 a.m. out here on the Pacific Coast, 11 o'clock out in NYC. Hope it's a great day wherever you are. Wanted to talk with you about the SoFi stock once again. The coordinated short attack resumes today, and I want to talk to you about the false narrative that's being created by the media in concert with the short sellers, because um, this is what the market is designed to do. Whether the market goes up, down, or sideways, it's designed to take money out of the hands of retail investors and put it in the pockets of market makers. That's what short attacks do. That's what everything does. And from what I've been reading in the media, and seeing on these videos and seeing on YouTube and, just everywhere in the financial press is, was the drop in SoFi stock justified by the ER, or was it an overreaction? And they're just giving you this completely false narrative that this was some kind of an organic response to this slightly weak ER, that the stock just sold off like 30% in 3 days, as if this is the kind of price action you get if your company is like puts out some kind of ER where you're having like massive problems. You're worried about bankruptcy. You lost your biggest clients. What they're the stuff that they're picking at in this ER is like, that SoFi didn't sell the personal loans, that there was a tiny downtick in overall aggregate accounts at Galileo, that growth in the membership as a ratio is a little bit weaker, and that's true. There's some legitimate stuff there, but this is the kind of thing that might cause your stock to sell off at an earnings report like 5%, 6%, 7% at the most. Absolutely nothing in there that would cause the stock to crash 30%. So, um, the false narrative that this was some kind of an organic sell off based on the ER is absolutely nonsense. This was a coordinated short attack that was going to happen. Um, One way or the other. This was clearly going to happen, no matter what the ER said. This was all planned. It was all locked and loaded. And I just want to give you the anatomy of a short attack. Let me move my giant head over here so you can see. Here's what happens in a short attack. Like, it's not complicated at all. What market makers need you to do is buy high on FOMO. There's two emotions they use. There's FOMO and there's panic selling. That's all they need to control you and take your money. So right here, the stock's just trading along sideways as it has been, mid high fives. So we get this pump on overnight on the or I don't know if it was overnight, but basically the stock goes a couple days before the ER. The stock goes from $5.67 on this massive 50-cent pump up to like almost 6.20. And then, so this is market makers sort of priming the pump. They're getting retail, they're sending a cue to retail investors that the ER is going to be good, that the market is expecting the stock to go up as it normally does after SoFi's earnings report. You usually get that pop, and then over time they short it back and it sells off back down over, the next few weeks or however long. But so right in this area, um, you're seeing some volume here. You're seeing some volume here. And what's happening here is retail is buying shares and also buying short term call options, and market makers are selling short. Um, and their algorithm, you notice this is a nicely sloped line upward. Their algorithm is letting retail buy a little bit more than they're selling short, because right in this area, right before earnings, no retail is going to sell. There's just your emotions, your instincts are telling you to hold through the ER because you're expecting another good ER. SoFi always beats earnings. They've beaten earnings and grown for like, I don't know, 7 consecutive quarters or something like that. So market makers are selling short, retail is buying, and then the ER comes, it spikes overnight. People are buying into the stock. Everybody, the media is all saying, "Oh, beat, beat, beat." You're seeing this overnight, and some of the lesser media, most anybody respectable is asleep. But I was up, of course. What does that tell you? But anyway, so then just this massive, massive short attack. You're just dumping huge numbers of shares, selling short. And basically, how a short attack works is retail was buying shares here on FOMO, and then market makers are shorting the stock heavily through here, selling. And they keep driving the price down. And then as you get way down into this area, market makers are covering and they're getting retail players to panic sell because and they're also triggering stop losses. They're triggering stop losses, of course, right in this area at 550. It's not coincidence that the stock finds some support there. Because as you start to trigger all those stop losses, you will use those shares, and market makers will cover some of their short position because even market makers, I don't think all of them anyway, thought they could drive the price of the stock down this low. But, I feel like certain analysts and the media were very complicit in not sort of calling this out. Everybody's like, well, is this justified? Is this justified? Like, it's not justified or unjustified. They were going to do it no matter what. It's a stick up. So now you have this like churn that's happening, and everybody's like, "Oh, is the stock going to go back up? Is it gonna... Of course the stock's going to go back up, but that's not the point. The point is here they're wringing out every single penny out of retail. They're covering their short positions. They sold short up in the low sixes, and they're covering in the high to mid fours in the matter of 3 days. Think about how much money these short sellers just made on the backs of retail investors who just took, 30% loss in a couple of days. Now, they didn't get any of my money because I don't participate in these reindeer games. All I've been doing is just buying shares, thousands and thousands of shares down here because I take what the market makers give me. I don't try to fight market makers. And if you're asking yourself, why do I always lose money? Um, it's because you're always buying and selling stocks like a little squirrel on crack because you're stupid and you're weak and you don't know any better. And the market makers see you coming and they pick your pocket every single time. You're like Fredo. You're weak. Okay? Stop buying these short term call options. Stop dumping when they want you to dump. Buy, sell the dip, smell the rip. Like that's what market makers want you to do, and that's what you do because again, you're stupid and you're weak, and you're basically a complete turd. But anyway, the stock is trading at 4.77, coming back up. As you can see, this might have been the bottom down here at 460. It's absurd that it went this low. Um, anyway, sorry about the rant, guys. I just like to go on and on and on because I'm kind of pissed off. I'm not pissed off for me. I'm not losing any money. I'm actually taking this as a big buying opportunity because, interest rates aren't going to be high forever. Student loans aren't going to be down forever. And, SoFi is really poised to do very, very well when macro conditions improve. Um, so I'm not worried about this at all. I'm just buying the stock and buying the stock and using the opportunity that these shorts have created to build long-term wealth. And that's what I'm going to do. So just again, going back to the false narrative idea, there's 3 reasons why SoFi beat and raise quarter didn't impress investors. And this is on the Motley Fool, Brian Berkowitz. These guys, like some of these, Motley Fool puts out a lot of content. They're like a volume shooter, but some of the content is pretty good. Some of it is just kind of throwaway, but some of it's not bad. So number one reason he gives is SoFi's balance sheet optics don't look great. This again is going back to the same major criticism that The company's personal loans on the balance sheet now exceed 9.5 billion. They originated 3 billion because basically their student loan business has gone in the toilet thanks to the government, and the mortgage business has gone in the toilet thanks to the high interest rates and the transaction volume just being almost nothing. So almost all their lending business has gone into these personal loans, and people are very worried about personal loans because it's the first loan people stop paying. They're going to pay their home loan, they're going to try to pay their car loan, they're going to pay their student loans. Those can't be discharged in bankruptcy. And so the first loan they're going to stop paying is an unsecured personal loan. Um, but I will say this: this is not taking into account that SoFi uses high tech artificial intelligence to screen their borrowers, and they only lend to borrowers that their system says are not going to default. These are the borrowers with the best credit, the high incomes, and these are people that when the economic downturns come, they don't lose their jobs. They don't stop paying their bills because they're big so-and-sos. They're very important people. They smell of leather-bound books and fine scotch. So anyway, number two, SoFi raised guidance, but not enough to impress. I agree with this completely. The guidance raise was very weak. But still, it was a guidance raise. In these conditions, nobody's raising. A lot of companies aren't even giving guidance, but SoFi, again, beat and raise in these conditions. And we're about to hear about student loans, and nobody's really talking about that. The student loan decision, even if forgiveness is approved by the Supreme Court, then they're still going to resume payments this year. And that's going to completely bolster SoFi's bottom line. Three, Galileo accounts fell. Again, this is a criticism. I think SoFi, a lot of people think they overpaid for Galileo and Technesis based on the revenues they're currently generating. But anyway, their accounts fell from 131 million to 126 million. Basically, what Noto said, and I've kind of dug deeper into this, is that they're trying to land bigger institutional accounts. They had a lot of smaller players. Um, and the margins weren't there. They weren't as high. It was quick sales, but it was not sustained revenues. And with the larger accounts that take longer to sell, longer to onboard, they're going to realize better margins and more revenues in the long run. So Noto has addressed this a couple of times. It's a matter of wait and see. Is what he's saying true? Is that going to actually pan out over the next couple of years? But again, that's why I think SoFi is a long-term deal. And I just want to take a look at the short interest over here on one of these websites. If you look at the short score, it's up to 75. The short has absolutely this whole thing was a short attack. This they want to talk about this like it was just everybody said, "Oh, the ER wasn't that great. Let's just sell the stock off 30%." That is absolutely not what happened here. They were going to short the stock completely, no matter what the ER said, and everybody in the media was going to help them do it. And some of these analysts, some of these analysts here, nobody, not to name any names, but if you're a half star analyst with a horrible record of you know putting price targets on stocks, and you're almost always wrong, then what do you care about your reputation? You're just going to in my opinion, you're just going to cut the stock target 40% for no. You see the other analysts like Oppenheimer, maintained a buy. Their target's like 7%. But the other analysts were moving their targets from like 7 to 650, or from 6 to 650, or from 8 to 7, or 6 to 8, things like that. But one of these, the analyst, the media just keeps reporting on Webbush is the guy who cuts his target from 8 to 5. His target's been like consistently moving along with these buy ratings, and then on the back of this report, where there just happens to be this massive short attack of tens and tens of millions of shares shorted, a certain analyst who the media just amplifies and amplifies and amplifies. You think this is coincidence, people? You think this is coincidence? They know you're weak, and they know you're going to panic sell, and they pick your pocket. And this SOB, there's no way on the back of the CR you cut your target from 8 to 5. based on a EPS estimate of next year cutting from 35 cents to 30 cents. That's basically 1 cent per quarter. 1 cent per quarter. And that cuts your price target on the stock from 8 to 5. It's absolutely ridiculous. I can't prove that this stuff is coordinated and that this guy's, ex-wife is shorting the stock with a bunch of money and a bunch of rat holes. I can't prove that. I don't know it, but all I'm saying is somebody somewhere is making money from the media amplifying this idiot's opinion. That is just a bunch of absolute crap coordinated with short sellers, in my opinion. Can't prove it, just speculation. In any case, guys, that's the SoFi stock. I know that's a huge rant, but that's basically all they want you to do, and that's all this is. It's a lot more simple than you think. It's not complicated. They give you emotional cues to buy here, and they make you panic and sell here, or you're stupid enough to put in these stop losses at 550 and $5 or 475 or whatever it is. Notice they, stop people out at these round numbers, and today I don't know what happened. They didn't get it down below 460, it looks like. What was the low of the day here? Looks like they might have failed at that particular number, but God knows they already stopped. No, they did. They got it down to 459, so they were able to trigger that stop at 460. So, don't use stop losses on stocks that are subject to big shorts and short attacks and stuff like that. They're just able to trigger those, and you're much better off setting stops at weird values or not setting stops at all and just paying attention to your stock. The stock not having any horrible bad news where it's supposed to crash. So, um, guys, back to the SoFi stock today. Price action sitting at 472, pulling back down a little bit, down 2.57%. Volume is not quite as high as it has been, but still approaching 30 million shares, sitting about 28 million shares traded. Um, as far as the short today, let me go over to the live short interest. Today, there have been another 11 million shares sold short, only 3 million returned, so another 7.5 million shares shorted. Live short interest is up to over almost 14.5% of the free float, 115 million shares. Utilization is now at 100%, and days to cover is up 94% to 6.52. Shares on loan is 220 million, and percentage of the free float on loan is 27.37. Estimated short interest of the free float, again, is a bit over 14. In the last 7 days, just to, show you where we're at from pre earnings to post earnings. The last 7 days, estimated short interest of free float is up 17%. Percentage of the free float on loan is up 60% in the last 7 days. Shares on loan are up 62% in the last 7 days. Days to cover are up 68% in the last 7 days. Cost to borrow is up only 4.38% because there are just way too many damn shares out there, because SoFi is always printing shares and diluting us like a bunch of drunk idiots. But still like the company, but there's just too many damn shares. And the utilization has gone up 54% to 100%. So I'll tell you like this. This is like the media plays this pretend game. Is this justified? Should you sell? Is this an overreaction? It's not any kind of reaction. It's pre-planned. It's pre-programmed by algorithms to push the shares down, get people to panic sell, trigger stop losses, and cover their short for a huge profit. Well, short sellers are making 20% in a couple days. Retail's getting kicked in the nuts for 20% in a couple days, and the media and this analyst are all obviously coordinated and complicit. If not, they might not be doing that actually coordinated actively, but all of the pieces fit together and the timing fits together, so it all works together, whether it's coordinated or not. So, they're screwing retail based on this false premise that the ER is so terrible. I mean, shouldn't the loans shouldn't you punish the stock price when the loans actually start to default and they actually start to take these losses? Because I don't think it's going to happen. They're making a ton of money on these personal loans. It's like you're going to punish the stock price because they're making all this money holding the loans on their balance sheet. The loans aren't going bad so far. Let's see if their loans go bad. Their customers are really good customers with good credit and good jobs. That's why the loans aren't going bad. They're holding loans on the balance sheet because they, yes, the gain in the margin they bake in to sell the loans. I know then their accounting, they preface their accounting that they're going to sell the loans. So there could be a problem there in terms of having to take a write down, having to increase their, you know, the amount they're writing down for bad loans. But if you look at their reserve ratios, they are extremely strong. It's like 14%. Most banks are 8 or less. SoFi can even make more loans because the deposits continue to grow. That's what they don't want to talk about in the ER, the 2.7 billion in new deposits, the direct deposits. The fact that they're, while membership growth has slowed as a percentage, membership growth is still very, very solid. I don't know. I don't think this is justified at all. I think it's like if you go into like Pirates of the Caribbean in Disneyland and the tour guide is like, the tour guide's the media and he's going like, "Don't you want to duck? You might get shot by one of the muskets." And you're like, "But this isn't real." Like, and they're like, "No, no, but if you were out on the street and somebody mugged you with a real gun, you'd duck, you'd run." Like, yeah, I'd be afraid because that's real. Like, if the if their earnings had crashed or their growth had crashed or they're about to go bankrupt or they had some huge problem or they had an accounting scandal or they had a fraud scandal, yeah, I would go, okay, 30% crash, I'll sell my shares. But we're in Pirates of the Caribbean. This is fake. This is a constructed reality you're making up. These pirates are wood and painted. The muskets are fake. So I'm not going to be afraid and panic sell my shares based on this, this fantasy you've concocted with your analysts and your talking heads on TV and your people in the media and your Motley Fool and your Monkey and your Benzing, all these people, all this echo chamber, they all want to go, "Oh, is this justified? Should the stock have crashed 35% for no real reason? Is this analyst completely full of crap?" Look at all the other analysts. The media doesn't say anything about all the other analysts that haven't downgraded the stock, haven't downgraded the price target 40% for no good reason. Um, Guys, sorry for another completely unhinged rant on the SoFi stock. My name once again is Stock Karen. I do want to speak with your manager, but it's not to complain about the fact that my fries are cold. It's to tell you to stop panic selling when there is no reason to do so. It is only price action. It is not fundamentals. You don't know anything about charts. Stop setting these stop losses. Stop letting the short sellers pick your pocket by selling short at 620 and then covering at $4.60 because you're a weak idiot. Just stop it. Stop buying short-term call options. Jesus. I'm buying thousands and thousands of shares. I'm going to continue to buy. I'm going to take what they give me, and I'm going to continue to invest in the SoFi stock and continue to have faith in management until there is a real reason not to do so. I'm not going to believe the media narrative. I'm not going to believe the short sellers narrative. I'm not going to believe crooked half-star analysts that cut their price target by 40% and time that with a massive short attack and downgrade. I'm just not buying it, folks. The only thing I'm buying is SoFi shares. You guys do what you want to do. This isn't financial advice. I don't know anything. I haven't gotten any sleep. I can't think clearly, but I do appreciate you watching, and I hope you have a great day. It is May the 4th, 2023. It is now 8:30 a.m. because I've been talking for about 7 hours, but in any case, you guys have yourselves a great day. SoFi is trading at $4.72, and the volume has slowed way down, still at 28.5. So, um, once the volume goes down like this, you'll know the short attack is pretty much over because they've wrung every single penny they can out of retail because you stupid freaks are broke now, and these hedge funds have all your money. So they're going to be eating steak and lobster and celebrating in the champagne room tonight, and you are going to be driving Uber because you know why. You're weak and you panic sell and you buy on FOMO and you sell the dip and you smell the rip. My name's Danny Deals for executive producer Hurricane Lopez. Thank you for watching Un Poco Mas. Today we didn't bring you a little bit more, we bring you way, way, way too much.